Hello traders, welcome to the Elliott Wave Street weekly update. I'm Juan Maldonado and it's a pleasure to start the week with some of our wave counts. This week we're going to check the euro, the S&P and the dollar CAD. Alright, here we have the euro. Last week was impressive how the market was moving. I have been talking about in the membership about market valuation. It's an important part of any strategy. So let's suppose that you want to buy a home, your dream home, or better, you want this house as a business. So the house is in a really bad shape. So you are looking to buy it in order to make some adjustments, make some renovations, and then sell it at a higher price, of course, right? But let's suppose that you ask for the price of this house, and they are selling this home at $1 million. So you check the area, and that's the fair price. You say, nope, I'm sorry, I can't buy this at $1 million because I have to invest some money. So I'm gonna buy it if they offer the house at $700K. So I can use $200K for renovations, and then I will sell it at $1 million at least, or probably higher if I can. But I need something cheaper than the market value, than the fair price, something lower. I need a discount, right? That makes sense. And any trading business that you start, that's a logical point of view where you need to buy low and you need to sell high, otherwise it's not going to work. So in the markets, that's difficult because most traders struggle on finding if a market is cheap or if it's expensive. And when they find if it's expensive or cheap, the next point is how they can buy and how they can sell, right? So let's start with the first part. If this is the last high, and we are here at this area, we can start building a box. Let's roughly draw a 50% area here. So it's based on the volume profile, the structure. If you have a volume profile tool, you can add it here to have a precise point of control. If not, don't worry. Just add a 50% box. 50% area in this box. Can be roughly, you don't need to measure or that kind of stuff, just roughly. So clearly, this area is cheap, let's say, and this area is expensive. When the market is cheap, the only thing you are allowed is to buy it. You are not going to sell it, right? You can't sell it at lower prices. All right. So with this simple market valuation technique, the only thing you can do here is buy. Okay. Now let's suppose that you want to buy your dream TV, and that TV is an OLED TV, and it's the latest technology, and you really like it, and it's the launching price is $20,000, $20K. Okay, so wow, it's a little bit expensive, so I'm gonna wait a little, and the next day you check the price, and they are selling the TV at $500. So you are in the store, let's say that you're going to the physical store, and you say, okay, I think I wanna buy it. That's a little bit weird, that drop in price. Let's wait a little. Let's see if someone else is gonna buy it. And you check the register, and nobody's buying the TV. So why? This is great. This is a fantastic TV. Why nobody else is buying the TV? That's weird. So you research a little bit more, and you find out that this TV is not working after a week. That their new panel has shown a lot of failures, and after a week you're going to lose your money. Let's say, you say, okay, I got it. That's why nobody wants to buy it. So, yeah, one point is that an asset is cheap, but a different point is if being cheap is enough for others to buy it. So when in the past, when traders were trading in the pits, like the CME pits, it's an easy task, because you were inside the pits, and let's say that sugar or coffee, let's say coffee is cheap. Let's say that coffee, you make the market valuation and it's cheap. And then you start watching the others, and you start seeing a lot of guys screaming, I want to buy coffee, I want to buy coffee. And you say, oh, it's busy that side, right? A lot of buyers, a lot of demand at lower prices. So the register, in case of the TV, is full. The line is full. Everybody is buying the TV, so I have to buy it as well, right? So in the markets, checking if this is a good discount is called demand. And look, this is the line, if you want to see it that way, of people buying. So it's cheap and people is buying. So two things need to happen. The market, the price needs to be cheap, plus you need to see demand. And in this case, the setup that personally I'm looking for triggering the euro is if the price comes here and rejects. So I'm looking for a discount inside the discount, and I want to buy it here. And if I have the setup, I buy it, and the plan will be the fair price. And if I can get more, fantastic. Probably to the previous high, let's say. Of course, managing the risk, managing the trade. But that will be my execution. So if I execute the trade here, of course, we are going to follow through the entire week the setup in the membership. But if I trigger here, I'm going to leave a protective stop loss somewhere here, and I'm going to start managing my trade. Right? That's it. But that's the only thing I can do. So one of the key things in trading is understanding if the price is cheap or expensive. That's it. Right? Now let's suppose that we are here, and eventually we are in doing the line, waiting to pay for our TV, and eventually something happens, and everybody starts screaming and running. Ah! And you say, what is going on? What is going on? Right? What is going on here? And everybody starts running as crazy and trying to get out of the store, and everybody is running. What will you do? You have to run with the others. Right? So something is going on. Later you can understand, doesn't matter. But look at this price action here. Are you going to buy this thing? Everybody's running, everybody's screaming. Ah! So why in this world are you going to stay there? Could be the building will be in fire, or something bad is going on. So if everybody starts screaming and running, why are you going to keep trying to buy it? No, I have to stay here. Everybody's running against me, and everybody's pushing. No, I have to stay here. I need to pay. I need to buy it. That's the mindset of the beginner. The beginner will say, oh, it's my second wave is hitting the 61.8% or the 78.6% Fibonacci level is my lucky day. Yeah, sure. The price is going to continue lower, and it's going to take you out. If you leave a protective stop loss under the low, whatever, or even worse, the price can collapse and move 200 points to the downside, and you'll be in a really big trouble. And you will say, oh, but it was my wave too. Okay, but you didn't see everybody screaming and saying it's the end of the world, right? So this is important, traders. Reading the price behavior. A corrective wave needs to be choppy. A corrective wave needs to be slow. A corrective wave needs to show small candles. So it's not just that it's a wave two, it's that you need to read the behavior of that wave two. The way is developing. That's extremely important. That's called reading supply and demand. When the price is moving down slowly, it's because someone else is buying. That's it. If the price is moving down fast, even if you put it a name, even if you call it second wave, because you call a cycle, it doesn't mean that it's going to do what you are looking for. It's going to validate the right behavior, right? The slow price during the corrective wave is key. So this is a great example of market valuation. During this week, we're going to work hard in the membership with these concepts. Let's have a look at the dollar CAD. The dollar CAD is another interesting one. Let's make the same market valuation. So right here, what would you do in this area? Buy it? Oh, just sell it if you like the setup. Here is the fair price, and here is to buy it. Right? So at this area, you start looking for setups to sell. This one looks excellent. This one looks good. This one looks good. And this one looks good. So four setups. Right? Looking to have the price moving back here. With these legs, you have enough to book some profits. Probably only 1 or 2 losses here. And the others worked nicely. The next step in this process, traders, is finding a buy trade here if we see others buying. So if the price comes here, it slows down, moves here, and rejects, we can buy it. Because we're seeing other people in line thinking the same. If the price comes here and collapses, and everybody's screaming with big candles, I believe that from now on, you're going to see the markets like that. A big candle is like a bunch of people running and screaming, and you're not going to try to go against them, right? Try to see it that way. I think that those little concepts are going to help you a lot. And if you have all these guys screaming and running, wait to see if this is going to be the area where you can buy it. So cheap plus a setup of supply and demand equals a buy trade in this area. Not only being cheap. If nobody wants the TV, yes, it's cheap. They can give the TV for free if you like it. Yeah. They can pay you to have it. Nah, thank you. Why? It's not going to work. I don't want it. Right? So something could be cheap, but it not necessarily means that it's going to have demand. Right? So you need to have cheap plus demand, or expensive plus supply, to build a setup. That's extremely important when we are trading the markets, and that's extremely important when we are looking for a setup. All right, let's have a look at the S&P. The S&P has been fantastic. As you know, if you have been following my analysis, I have been bullish since below the 4,000s or lower, right? So I'm looking for a fresh high. This is a weekly chart. Let me hide some of the waves. So the plan that I have for this year is moving above this area and probably more. So we are in the road. We are in this beautiful trade, has been working nicely, but also a market fact is that it's expensive. I'm not going to sell it because I have a bullish bias, but I want to buy it on every retrace. So look how the S&P likes to build the retrace legs. Quite tiny, This is not a market that during the cycles built big corrective waves. This is the pandemic leg, and this is the inflation leg. That's it. All the rest are small. Look at this beautiful thing here. Wow. Imagine having something like that here. Well, but a market reality, a market fact is that we are at the extreme. So at the extreme, let's say that we're here. The price can continue, right? So being at the extreme doesn't mean that it's going to reverse or something like that. But if it reverses, we have a better discount, right? So all we need to do on lower time frames is buying at a good discount. So it requires patience. And of course, if you're scalping or day trading, you can go ahead to the 1 minute, the 5 minute chart and do your magic, of course. There is no problem. But on these higher time frames, I'm looking this week for a discount. Hopefully, we're going to have it. Hopefully. If we have the price coming down here or even better, deeper, and we have the setup, remember, discount plus good setup and demand, with demand, we can trigger here at this area to follow the trend. I don't want to sell the S&P. I don't want to go against this major trend. It's a big week because a lot of participants, let's say, are looking into selling into the earnings reports. So let's see the volatility, but the plan is to continue following our S&P bullish trend. Traders, we have a lot of new things in the website. we are working in this new system with a new learning management system for our courses, and there are coming a lot of fantastic new features. But also we have the weekly analysis, the daily analysis. So here in the membership, if you visit us on elliottwavestreet.com, you're going to find the plans. If you are doing forex trading or stocks or the full access, here are the list of instruments that we cover on a daily basis. You're going to get immediate access to the charts, to the Monday to Friday videos, to the education. We have a fantastic educational library inside on any of the memberships. So you can sign up and get immediate access to these fantastic analysis. Also, if you are outside the US, you can apply for this special offer to get the full access membership completely free with this broker. So here are the terms and conditions of the promotion of this scholarship. And if you like it, you can follow these steps and get immediate access, or you can just buy the membership where we are offering this special price, $19 the first month, so you can try it out, and then $75 per month. Traders, please have a fantastic start of your week. I'll see you soon. Take care. Bye-bye.